Next topic we're going to cover is order blocks. Order blocks, what makes them high probability and what are the characteristics of them? First of all, order blocks need to form at a key level. So bullish order blocks with a short-term low liquidity pool above it, or a bearish order block with a short-term high liquidity pool below it. They push price into a liquidity pool, causing a purge on stops. So an up close candle that pushes price into buy stops when bearish, or a down close candle that pushes price into sell stops when bullish. We'll outline those in the charts coming up. So bullish order blocks in a buy program, they support price action to go higher into the draw on liquidity above market price, and vice versa with bearish order blocks in a sell program to support price lower, or resistance to draw lower into the draw on liquidity below market price. When we are bullish, down close candles will act as roadblocks. When price moves down into them and support price higher, this is when it's validated. And for bearish, an up close candle will act as a roadblock too. So when price moves up into them and then resistance to turn down lower. Again, time frame alignments for order blocks. Same as all the other lessons, we have a monthly level into daily order blocks. We've got a weekly level into 4-hour order blocks, a daily level into 1-hour order blocks, a 4-hour level into 15-minute order blocks, and then eventually a 1-hour level into 5-minute order blocks. And all these different time frame alignments will be shown in the charts coming up next. So over here we have a USD CAD weekly chart, and again, keep in mind the previous lessons, right, with engineered liquidity and order pairing and external and internal range liquidity. We can see buy stops have been rated on this weekly chart on the USD Canadian dollar chart, right? Over here, buy stops have been rated. We want to turn down lower into an imbalance and going for that engineered liquidity. So what can we see over here? Buy stops rated, failure swing, right? Then we have this imbalance up here. So outlining those buy stops rate over here, this red box above here, right? Order pairing. Then think about the characteristics of a high probability order block, right? It rates liquidity and then breaks structure lower afterwards. So we have this order block over here, right? We take out buy stops and then price continues to break down lower, confirming this order block. So drawing out this weekly premium order block out in time over here. When we go to a 4-hour chart, and then we have some more structure to work with. Now take a look at this chart and see if you can spot another high probability order block only on a lower time frame. Alright, think about the previous lessons again, right? Order pairing above these old high. So smart money accumulates sell orders to willing buyers, right? Then where is the liquidity? Where's the draw on liquidity? We have a failure swing down here, failure swing down here. So we have a draw on liquidity. We have a previous buy stop rate. Now what is a high probability order block in this piece of price action? If your eye went to this up close candle, that is correct, right? Because we take buy stops previously and breaking down structure afterwards. And remember, those order blocks need to form at a key level. And what is our higher time frame key level? We've got that weekly premium order block. Now spotting out this 4-hour premium high probability order block, right, as outlined earlier, this is where price action finds a roadblock, right? So price cannot continue up higher into this buy stops up here because we previously already rated it, then broke structure after, and think about the failure swing, engineered liquidity down here, right? So we retrace back into premium and then continue down lower. This is a classic high probability order block. Another example on Australian dollar, US dollar monthly chart. Again, external range liquidity, right? Monthly external range liquidity. So we rate these buy stops up here. So what do we do after external range? We go to internal range, right? We see this monthly fair value gap down here being the draw on liquidity. Dropping down into a daily chart right here, and remember that old high got rated, right? And we have our draw on liquidity. After external, we go to internal, which is below here. But before we reach this external range, look where price is being supported at, right? We have this down close candle taking out liquidity and supporting price action all the way up into that external range liquidity. Another one over here, right? Forming a swing low in a key level, which is this order block down here. Price moves up once again, taking out buy stops over here. Price hits an imbalance, so what does it do? It hits a key level, right? So forming an order block over here. It has to hit a key level to be a high probability order block. Price is being supported by this order block over here, continuing up and up and up. Rates external range liquidity once again over here, but it's just slightly, right? So it's not like a significant buy side rate. So it's more likely that it will run this high again, as it is not as a significant rate on liquidity as you want to see before price action breaks down. Now we see a retracement back into discount, and what are we using again? We're using this high probability order block over here. Price is dropping into this order block. Now it's coupled up with a fair value gap also. So this is a layered PD array, right? So we have an order block and a fair value gap coupled up with each other, making this even more high probability that this is a very good level to buy from. After that, price action pushes up into that external range liquidity, and eventually we drop lower and lower and lower. And remember, we've these lows down here, right? So this is for later liquidity, engineered liquidity. After we take external, we want to go to internal range, which is on the monthly time frame, right? So we use daily structure to go back down into that monthly internal range liquidity. What happens up here? Order pairing, right? Willing buyers, willing buy stops are being paired up with smart money sells, and again, pushing price lower and lower and lower. So here we have buy side of the curve, right? Price is being supported, every order block is acting as a support, and we are still in bullish order flow until we reach that external level, right? This is a key level. Order pairing happens over here, right? Buy stops have been liquidated and smart money can accumulate their sell orders over here. So price pushes down, 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 breaking structure, right? And what does the form over here? We have a high probability bearish order block. Now why is this high probability, right? We take out buy stops previously into a premium level, which is a fair value gap over here. But important, this high gets rated and then price breaks down after. So we have this high probability order block formed where price action can act as a resistance to continue down lower, because we already, remember, took out external range liquidity on the monthly time frame. So now we want to go into internal range liquidity down here as in this monthly fair value gap. Again, breaking down lower, another order block, price being tapped into here, moving down again, another bearish order block tapped in again. And remember, also a fair value gap, right? So it's paired up with a fair value gap, making it even higher probability. And price keeps going down and down and down. Now, let's talk about inducement order blocks, which is this over here, right? We have this rejection candle, right? Long wick on the top. So a bearish reversal candle. Now, why is this an inducement order block? Right, we've got buy stops over here, buy stops over here. So price seems to be pushing up and up and up, and it seems like we're in bullish order flow. But remember, this order block is high probability because we rated this high over here and we tapped into this fair value gap. Buy stops over here. We rate this high, inducement for more buyers. We rate this high, inducement for even more buyers. And this 15-minute order block we know is high probability, so it will act as a resistance. And you can see price action taps into that order block and uses this as a resistance to continue down lower. Now, important, time is more important than price, right? You want to be in a specific kill zone for your high probability order blocks to function correctly. So London kill zone, New York kill zone, even London close kill zone are perfect times to engage into the market. And we can see over here with London close, we rate this buy stops and then continue down lower as order flow is bearish, remember, and this is perfect inducement because we take out this high, pairing up buy stops once again into this order block and then continuing down lower inside the kill zone. So over here we have a USD CAD 1 hour chart. We're gonna spot that high probability order block once again, but take a look at this piece of price action and why do you think this is a high probability order block? Right, we've got this sell stop rate before this price action displaced up higher and leaving this bullish order block behind, right? We want to see sell stops rated for bullish order blocks to make it high probability. Price pushes up and up and up, hitting this fair value gap, filling it up completely. Then what is more perfect about this? What is even better about this piece of price action over here to make this order block even more high probability? We just talked about that inducement order block, right? Inducement, why is it inducement? Because we have a short-term low formed just before this level over here, right? So if you take this range low to this range high, buy side liquidity is above here. When you have a short-term low formed near the middle of the range and the order block has still not been touched, you can have a perfect turtle soup, so to say, because we're rating this low and then displacing up higher. So this is pairing up again, orders, right? It's order pairing. We have sell stops down here, price pushes down lower into it and then accumulates buys for it to push up higher. Again, time is very important. So London kill zone over here, right? Couple up your entries with the correct time. We can use again London kill zone, New York kill zone, London close kill zone. And if you're aiming for low of the day, London kill zone most of the time is your best bet. And if you see that 1 hour order block created the previous day and you see engineered liquidity over here, right? These lows, this failure swing down here, you can expect, if order flow is still bullish, of course, they drop into this high probability order block, taking out those sell stops, and you can couple up your buy with someone else's sell stops, making it higher probability. The correct time, right? London kill zone, pushing up and up and up, creating low of the day. Alright, so over here we've got a gold weekly chart. Now, what is more obvious than these buy stops over here, right? Relative equal highs up here, low resistance liquidity. And look at this piece of price action, right? We're moving up and up and up. We can see down close candles supporting price action. And look at this range, right? This low to this high is our current dealing range in this piece of price action. Now, if we go further, what happened prior to this move up, right? Sell stops down here, relative equal lows. And what happens over here? Order pairing again, right? External range liquidity. We have these sell stops again paired up with the long positions from smart money. Price displaces up higher and higher and higher, breaking structure up here. And what happens when you break up structure and you take liquidity before it breaks up structure? You form a breaker block, right? And breaker is also a form of an order block. So we can see that over here, moving it out to the right in time, right? Price keeps pushing up and up and up, engineering some buy side liquidity. The retracement happening back into that weekly breaker. Now, if we go to a 4 hour or a daily chart, we can see a key level form inside this breaker. Right, so we got a 4 hour chart. It's pretty naked right now, but we're going to annotate a little bit more once we go on. Engineered buy side liquidity to the left of here, right? Price breaks down. This is the retracement on that weekly candle. So we can see the weekly breaker down here. Now, where is the high probability order block over here? Right, if you guess this little piece of price action is a sell stop rate and then break of structure upwards, you are very correct and you're on the right way to reading this piece of price action. over here, sell stop rate, right? Order pairing, once again, inside a key level, very important. We need to see that key level hit where the smart money reversal happens. We break up, break of structure up here, right? Now we have a new dealing range. So from this high down into this low, we have the equilibrium line over here. So this should be the high probability order block, right? And why is high probability? Again, sell stops have been rated inside a key level, and also fair value gap and discount of this whole range over here. Right, outlining that order block over here with the box, this gray box. We have the engineered liquidity up here as a draw on liquidity. We've got inducement, right, because we're taking out short-term lows down here. So sell stops have been taken out back into that order block, and then price action is ready to go into bullish order flow, because on a higher time frame, remember, we want to go for those equal highs, right? Continuing up into price action, there are more opportunities to get in, right? You didn't miss the move if you didn't get in on this lower end part here in the discount, but obviously you caught the low of this whole range if you did, but there are multiple occasions where you can get in. So again, price action pushes up here, right? You see this sell stop rate. What is this sell stop rate? It's a high resistance liquidity run, which we covered in the previous lessons, right? So this is what you want to see when you are bullish, and you want to see that engineered liquidity above market price, which is over here, right? We have these failure swings up here, so there's buy side liquidity, right? High resistance liquidity run, and then in the process of that high resistance liquidity run, we're forming a high probability order block. This order block offers support for price action to come back down into discount, again forming another order block, and price keeps pushing down into that order block to continue up higher until we reach that buy side liquidity, right? If after buy side liquidity has been taken, we have to be careful not to pick any down close candle, because those are not order blocks anymore. We need to have a draw on liquidity higher, right? We've got a British pound US dollar 1 hour chart. This is the last of the time frame alignments for the order blocks, right? We're using a 1 hour chart and dropping into a 5-minute time frame to see how the order blocks continue to support or resist price action to our draw on liquidity. So over here, if we have this whole piece of price action, we can see these buy stops have been rated up here, right, into a level up here. We're continuing lower, leaving a fair value gap behind. So this is our key level over here, right? We have this 1 hour fair value gap, and now intraday we need to frame our order blocks on the 5-minute chart. Draw on liquidity being on the sell side, dropping into that 5-minute time frame, right? Again, think about external to internal range liquidity and order pairing, right? So we take out these buy stops up here, and then we rate it here with an order pairing into that 1 hour fair value gap. After this buy stop rate, we form what? A high probability order block, right? On the 5-minute, we're breaking down structure over here. Structure shift is here. Order block is resisting price action. Keeps coming down and down and down. We have another up close candle resisting price action, moving down and down and down again. Now, importantly, we have another engineered liquidity up here, right? Relative equal highs. We see price action rates that again for what? External range, order pairing, right? Price break structure again. You see that displacement indicating it's still bearish. Did we hit that drawn liquidity yet? No, we did not, because it's down here, right? So price action keeps declining. We have this order block after that order pairing over here. Price resists this order block, which is perfect, coming down again, leaving this relative equal lows, right? Breaking down, leaving another order block over here, and then continuing price down. And price keeps doing this. It keeps continuing to engineer liquidity to pair up orders. Again over here, relative equal highs, right? Buy stops being paired up over here, and with this order pairing, it's good to go. As we had not hit that draw on liquidity yet down here.